Radar Logic's research, as we've been reporting here at Bloomberg, has been right on the money. Michael Fader's company has forecast the Case-Shiller number a week in advance within half of 1% of the print for the last 6 months running. Not because they need to, but just to show they can. Radar Logic's own RPX index shows a recovery underway in housing, even as analysts, including Meredith Whitney and Deutsche Bank's Karen Weaver, predict a double dip. And Sri Kumar just told us he thinks we're already in a double dip. Fader says a collective interest to avoid foreclosures and a renewed push in financing across the industry will save the day for home values. And he's here to explain his case, to argue his case. Michael, thanks so much for joining us. Let's talk about this because there's so much negative news on housing. All of the data points that we see point to a continued decline or another decline, a double dip, as you heard Sri saying in the last segment. Why are you still bullish on the housing market?
Well, I think the emphasis there, Matt, is still bullish on the housing market. And if you remember what we've been saying for the last 6 months, we've seen much stronger activity through what we would have expected the seasonal downturn in the fall. And yes, even our numbers declined January of 2010 versus December of 2009, but are basically flat to up a little year over year. We think what's driving housing purchases now is a multiple set of factors. One, prices have actually retreated to 2003, in some cases 2002 levels. So that's the first time in 7 or 8 years that people have seen those prices, and a lot of demand was priced out during the boom is back. Unemployment, sure, we hear about it, but the large majority of the unemployment is still below the college-educated level. That's not necessarily the home-buying demographic, and household creation continues. Interest rates are at historic lows. The two significant negatives, or not even negatives, but uncertainties that are looming are inventory supply. We heard a lot about, gee whiz, purchase rates are going down, month supply is going up. Well, the reality is month supply in existing homes is roughly 8 months. It got to 11.2 at its worst. It's come back down. 6 months is normal.
But inventories, it's safe to say, though, Mike, that inventories are going to go up. I mean, we talked about this a little bit with Sri. I mean, as discouraged people were looking to sell their home, the market was so lousy, they took it off the market. I mean, they're going to come back as they start to see these signs of optimism. So that's going to make inventories go up again.
Not to mention the foreclosures.
And foreclosures and depress prices again.
You've got 7 million homes in foreclosure, 11 million homes underwater, and we hear from analysts like Karen Weaver that that's just going to continue to go up and up and up.
Well, let's take those numbers, and then I'll come back to the existing homeowners who want to sell. In terms of the foreclosure overhang, it's a big problem. If you stop and take that 7 million plus 11 million at median home prices, it's a $3.5 trillion problem. Now, what I think you have to keep in mind is that the owner of most of those homes in event of foreclosure is likely to be the federal government, because much of that paper was guaranteed by the GSEs. Even where the banks are holding the paper, if they simply foreclose on all those houses and throw them onto the market, they collapse the whole system, and I don't think anybody's anxious to do that.
So basically your point is the government is going to continue to support this system, so we're not going to see any more price collapse, if you will.
Well, the government can't afford to foreclose on all these homes, you mean?
Secretary Geithner testified yesterday before Barney Frank's committee, and he was very clear that there are a lot of arguments in favor of the government continuing some involvement with Fannie and Freddie and putting forth a government-supported housing system that works. He emphasized two things that I thought were critical. One, that we'll have a proposal from Treasury within months, not years, and that two, it has to contain greater supervision and oversight to make sure that the ills of the past are not repeated. But if you stop and think about it, as long as the government will help people who in fact qualify to buy and finance houses do so, then there's a very strong case for how we can avoid this prospective flood that the analysts have been talking about. Home builders have hauled back their construction. We talk about reduced starts. Well, the reality is that new homes traditionally cost more than existing homes, and the market for new homes, especially at very pricey price points, began to dry up. The second real issue is there going to be a mortgage pipeline? Sri said that the Fed's backing out of its mortgage purchases next week. Well, we haven't seen a dramatic increase in interest rates as a result of the Fed's exiting. We could, but you know, Matt, as well as anybody, typically in the markets you buy the rumor and sell the news. The Fed's been saying for months that they were going to end the program, we're going to end the program. Then they said yesterday we're going to end the program. The reason that rates popped up today is because they're priced against 10-year treasuries and the treasury market got hit.
So nothing out there to change your stance here. You feel upbeat in terms of housing.
And your numbers that you put out today support that.
Well, the RPX composite actually dipped down in early January into the high 170s, which was a fairly dramatic drop from where it had been trading, which was the high 180s. It's back today, and we're looking at late January. Remember, we've got a 63-day lag, but it's back today in the high 180s.
Right.
So we believe, and we'll see soon enough, that the price points, the fact that we're coming into the spring, what we'll have here is a little V as opposed to an L, and yes, we remain bullish.
All right, Michael, thanks so much for joining us. Michael Fader, CEO of Radar Logic. And check out, if you have a Bloomberg terminal, you can check out his numbers just put out on the terminal.